Bridget, rates are everything that's on people's minds right now with buying and selling a house. So that begs the question, give me the answer. When are rates finally going to come down for home buyers?
Not anytime soon, Joe.
That's not what anyone wants to hear, Bridget.
It's so hard to determine when exactly rates are going to come down. Rates are affected by economic conditions, monetary policy, the bond market. There's so many things that go into it, and it's just so hard to know exactly when rates are going to come down. But I would say definitely not anytime soon.
Okay, that's not what anybody wanted to hear. Let's just push pause for a second, though, and I think we should back up. And I'm going to screen share for you so that a home buyer that's brand new, first-time buyers, they probably have no idea what high interest rates are. For a buyer buying today, I don't think they have any real concept. So let me just pull up. This is just off Freddie Mac's website. This is the long-term historic average of rates. You don't need to see exactly what these numbers are for now, but you can see they've been super high. And then right here is where we're at. So if I zoom in a little bit, this is about the last 3 years. So for those that have no idea what we're even talking about, this is why people are kind of freaking out about rates. They were down in the 3s. Now we're up in the 6s, give or take. Right now we're at 6 and 2/3. So that's actually not too bad for today. But obviously we want the rates to come back down. So for somebody that's in there, they're thinking, hey, I don't like my sale prices and I can't afford, my payments are super high because of rates. Surely there must be some hope, Bridget. So what can people do to get those payments back to where they're feeling more comfortable if you're telling us rates aren't coming down anytime soon? What can we do?
Well, there's a few things to get your payment down. One thing is obviously going to be credit. Down payment is one thing. One of the big things that you may have heard in the news is these LLPA rate adjusters. Some people are saying that the higher your credit score is, you're going to be paying more money than people with a lower credit score, and that's just fake news. But there are things you can do to get your payment down.
The internet would never have fake news, Bridget. That can't be right. I saw it on TikTok, so it has to be real.
It has to be real.
Okay.
Man, the scare tactics are something else.
I know. All right. Anyways, the LLPAs. So tell me what these are and how do we get our payment down with them?
So there's 30 different loan adjusters on a loan, and they range anywhere from your loan amount, term, purpose of the loan, how many people are on the loan, credit score, credit history, if you're going to occupy the loan or if it's going to be a second home or investment property. There's so many different things. Some of them we can control, some of them we can't, but I can work through some of these things with you, where we can possibly get your down payment higher and utilize one of these other programs to get you a higher down payment with even potentially less money out of your pocket. And some of the things you can control are your credit score and your credit history and your debt to income ratios. That's a big one. Sometimes I see these high debt to income ratios, and there are ways to get that down before you actually find a house and lock in your interest rate.
Okay, push pause. You're hitting me so fast with so many things. I love it. Let's simplify.
Boom, boom, boom.
LLPAs. Okay.
LLPAs.
Here's kind of market rate. Tell me if I'm understanding this right. Here's kind of the market rate of what interest is right now. And then each one of these 30-ish LLPAs are, they push you a little bit higher or a little bit lower, a little bit higher, a little bit lower. And then it's kind of like the summary of those is what rate that person gets quoted. Is that about right?
Exactly.
Okay, perfect.
There's little adjusters for each one.
We want to get all these as high as we can, or
Yes.
as low as we can, you know what I mean? So that we get the lowest interest rate. Okay, great. So that's kind of how you guys come up with what a rate a person gets, which is not actually what Freddie or any of them will say. That's kind of market rate or averages. But we want people to get best rates possible. So we're trying to get out. Okay. So now that we know that, you mentioned credit. Give me some of the maybe quick little things that people can do, or the first things you're going to look for maybe a younger first-time buyer or move-up buyer to improve their credit to get their little LLPA score better.
I would say the biggest thing is to pay some of these high credit card balances down. There's a few ways to do it. If you're approaching your limit or at your limit or over your limit, there's easy ways to get that down. Talk with me or a loan officer that
you,
is,
of course. I don't want to
that's
call
experienced.
Anybody else. Don't call Rocket Mortgage.
Yeah, exactly. That'd be the worst thing to do.
Did I just say that?
Talk with me, who's 18 years experience in the industry about some of these things and the best way for you to go about it. the best strategy for you. But one of the ways, if you have a credit card that's maxed out, is to potentially just increase your limit.
I was just
Easy
going to ask
peasy.
you that. I thought, no, I don't want to like give somebody with high debt more potential, but would that qualify? I mean, that would put you, because I've heard you say 30%, if you got a $9,000 limit, you don't want it above 3,000 debt out of that. Does that work? I mean, does that shift
It
that
works.
percentage? Oh, wow. Okay. I don't know
As-
if I'm really prescribing that. Be very careful, because if you're already in debt, I don't want you to just go all of a sudden, have a way huger limit, but that's interesting. Okay. I'm going to go for, first of all, how about you pay your debt down, but potentially increasing your limit would also get you there. Okay, interesting. All right, so bank down your debt to income is one thing. What else can we do on that credit? Do we pull a credit card? If they don't have a lot of credits, how do we get that fixed?
Yeah, if you don't have a lot of credit, I would say taking out new credit, taking out a credit card that you're going to use, something that you're going to want to use, but you're going to want to use it in a very good way.
Yes.
Yeah, exactly.
How long does it take for a new card to start giving us a positive bump on that score? 1 month, 2 months, a year? How long does that take?
So that's hard to answer, because it'll be right away. As soon as you start using that credit card, it's going to affect it in a positive way. Taking out a new credit card, like just having that new credit card and having that credit pull, could slightly lower your score in the very short term, but using that credit card is going to affect your credit score in a positive way. So it could be a wash at the beginning, or it could drop your score a little bit, but you'll eventually see that go up, and it'll go up pretty quick.
Okay. And I've heard, I think it was you that was saying new credit pulls hurt your score. So I'm assuming a person doesn't want to go apply with 10 different credit card companies to pick the best one, right? Should we just pick one and stick with it? Or how do we pick one without hurting ourselves?
Pick one and stick with it. And that goes the same with mortgages. Like if you apply for mortgages, don't go out and apply with 10 different people, and don't go to these internet lenders like Rocket Mortgage.
Mm-hmm.
That will hurt your score if you're
We're
going
just
out.
throwing shade at our poor buddies Rocket. Their attorneys are going to be calling me.
Poor Rocket.
I completely agree. Here's the thing, which I don't know if I mentioned this on other videos, but you go to a mortgage broker, such as Bridget at Bell, they shop a bunch of different investors. Then there's no real reason to go hit 5 different banks and have them all shop it. You have to go to a mortgage broker so that they can shop through the different things, versus going to a single bank, Wells or Chase or whatever. They can only give you their loans, products, services, whatever. So it's a huge soapbox of mine. We won't go there today any more than I already did. Totally agree. So just get a credit card. Don't have a bunch of them pulled, because those hard pulls will hurt you. And then down the road, only go to one lender. Mine here. So okay, great. So we can fix our credit a little bit up that way. How else can we get our payments down? Obviously, having a bigger down payment is great. Can grandma gift us some funds, or how are we going to get that down payment down?
Gift funds, yeah. If you can get your down payment up, that's one big way to do it. One big misconception is the higher down payment you have, the better interest rate you're going to have, which isn't necessarily this. It's not the case.
What? Okay, unpack this.
Yeah.
Convince me I don't want a higher down payment.
It's not a bad thing. Obviously, your monthly payment is going to be lower the higher your down payment is.
Okay.
But one of these LLPA loan adjusters is loan amount. And that's actually a big one, is loan amount. So I might see a loan where somebody's putting 20% down versus 5% down. That person that's putting 5% down is going to have a higher loan amount. And that's one of the adjusters that is a positive adjuster for you, is loan amount. The higher the loan amount, typically, the lower the interest rate. So your interest rate, if you compare that 20% down to 5% down, is actually probably going to be significantly lower on the 5% down. Or you have to do 5% down, maybe just even 15 or 10% down.
Sure.
And there are ways to do it without mortgage insurance, where you're not paying a monthly mortgage insurance. So
okay, that's very interesting. I mean, I feel like if you're at 15% down or 20, you should just go for 20 to avoid PMI, wouldn't you? I mean, I can't imagine getting PMI is worth offsetting the interest rate, or am I wrong on that?
You can be wrong on that, because there's 3 different ways to do PMI. One of them is lender paid. One of them is upfront PMI, and then one of them is monthly PMI. And that's what everybody knows is the monthly mortgage insurance.
Yeah.
But you can actually pay upfront. You can pay a lump sum mortgage insurance. So if you're doing 15% down, it's not going to be a significant amount. The other thing is to do lender paid mortgage insurance. So your interest rate might be slightly higher, and then you're not going to pay monthly mortgage insurance at all. So your loan amount's going to be higher, but
I like it. Okay. And I think this is the point we need to just push pause for a second and say, I love all my people doing their research online. And obviously it's my whole channel, but people just need to go talk to the lender first. Right?
Exactly.
This is such a huge pet peeve of mine. Like, we're not going to charge you anything. You're not committed to anything. We're not going to like twist your arm and force you to buy a house or something. No. You just need to apply with Bridget or someone equally awesome. And then they can look at your credit. They can run you through all this crazy algorithm business that's way above my head and every buyer watching. And then you can help them decide, do we do 20% down without PMI, but you're a different limit, blah, 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 or do we do a 5% down, and which of the scenarios is better? You're not going to get that from a generic video like this or whatever Googling website. So just apply with a lender. Okay.
Yeah. And we can run a gazillion scenarios too. Like you can say that it's like, it's no big deal just to run a million scenarios.
Right. And it doesn't hurt your credit. Like when you do a hard pull or you go to one of these online things that your social effort. Well, that's a wrap on this conversation with Bridget. Don't forget this is part of a 3-part series, so you can go see some more great content right here. You'll also find her contact information and mine in the description down below, and we look forward to talking to you very soon.